Welcome back, traders, to this channel. This week global markets are facing a perfect storm of rising oil prices beyond the key $100 per barrel level following Iran's controversial leadership succession and continuous escalating airstrikes targeting Iran's oil infrastructure. This geopolitical energy shock is, of course, sending ripples across the financial world, supporting the US dollar as inflation fears clash directly with President Trump's demands for lower interest rates, making this week's U.S. CPI inflation data an absolute must-watch event. Meanwhile, in Japan, officials are probably caught in the crossfire, sweating over a plummeting yen ahead of critical GDP growth figures, while over on Wall Street, Oracle's upcoming earnings will serve as an ultimate test to see if the AI tech boom can survive through a turbulent, oil-driven drag on broader market sentiment. So in this week's technical outlook video, I'm going to analyze USDJPY, WTI crude oil, and US 100, or otherwise the Nasdaq 100 index. So let's first have a look at crude oil, which just had an amazing start to the week. It opened by more than 30%, near 119.70, surpassing successfully the 100 level earlier today. That level coincides with a 261.8% Fibonacci extension of the downfall from June to December. And the key question here is whether oil prices will remain above 100. And given all this geopolitical turmoil in the Middle East and the selection of another hardline Iranian politician, perhaps tensions between the US and Iran could further escalate, likely spreading to the Middle East. So that could, of course, be a bullish catalyst for oil prices. Now, from a technical perspective, we can see that the price has fallen to trade near 102.50. So I would like to see a clear close above this current resistance in order to target again the 119.70 region, and perhaps any gains beyond that could initially pose near the 124 number, which was a former resistance from June 2022, while beyond that all the attention will turn to the 2022 high near 131.80. And since discussions have been about whether oil prices can reach the 150, can move beyond 150, the 423.6% Fibonacci extension is currently located near 158.40. So that could be another key test for much steeper increases in oil markets. Now, in the event of a slowdown and perhaps if the price holds below 102.50, then maybe some consolidation could emerge between 93.70 and 96.30. Those have been previous restriction levels. Then below that, the 88 number could come into view. That coincides with the March 2024 high. While below that, I expect the 80 number to also act as support before we move towards those broken resistance lines, with the first one coming near 73. Now, looking at USDJPY, well, the US dollar has been benefiting from rising oil prices. It seems that investors are seeking dollars in order to buy dollar-denominated energy supplies. So there is an increased demand for the US dollar. However, USDJPY is also exposed to a potential intervention from Japanese officials, as the yen is currently located at the lowest level, which have been seen back in January. That was the period where FX intervention signals emerged. So it will be quite interesting to see if Japanese officials will intervene to rescue the yen. Now, in data releases, so Japan will release GDP growth figures for the final quarter of 2025. Household spending for January will also be out in the same day, tomorrow on Tuesday. And that would be interesting to watch because it could provide some evidence about whether Japanese officials can intervene in this market, given that Bank of Japan officials remain data dependent. Now, on the US front, US CPI inflation numbers could be another important data release later this week, although it remains to be seen whether the data may lose some importance given the rising geopolitical risks in the Middle East, which increase the risk of higher inflation. So if US CPI data arrives stronger than expected, perhaps that could cause some hawkish talk within the Fed, which meets later this month. And that could actually contradict President Trump's demands for lower interest rates. So it would be interesting to see if the Fed can actually move against Trump's demands as long as, of course, geopolitical risks remain in play. Now, from a technical perspective, well, we can see that the price is again trying to close above 158. If it manages to close above that, I expect resistance to come next somewhere between 159 and 159.40. And if Japanese officials don't intervene, then the rally may also expand towards 161 and then attempt to touch this former support trend line near 162.55. Now, if we look at the technical signals down here, of course, we can see that the market is close to overbought levels, so negative corrections cannot be ruled out. Perhaps if the price pulls below 158, as it did back last week, then maybe it could revisit the 157 area, a break of which could further cause more declines, likely towards the 155.60 territory where the 20-day moving average is placed, while lower than that, I expect another negative stretch towards 154 before, of course, we reach the 151.30 and 152 region where the 38.2% Fibonacci retracement level of this uplift coming from April 2025 is placed. The 200-day moving average is also within this region, so that could be another critical support territory if indeed a sharp pullback happens in this market. And finally, looking at the US 100 index, well, global stock markets have been in the red since renewed geopolitical risks emerged in the Middle East. The investors are probably concerned about rising oil prices, which could limit the central bank's ability to cut interest rates. So, given the high debt market in tech sectors, perhaps that could be a negative catalyst for Wall Street. And looking at the US 100 index, we can see that the price is currently trading near its 200-day moving average, near 24,275. And that comes ahead of Oracle's earnings due on March 10th after the market close. It will be interesting to see if the data from Oracle can actually show whether investors are still sensitive on AI developments. Expectations are for earnings for a strong earnings boost. Nevertheless, Oracle is has key clients such as Meta and Nvidia, so and given the negative cash flows that emerged after the huge spending on AI, it would be interesting to see whether the company can raise some caution. If it does, if the data also surprise to the downside, we may see another downfall. A break below 24,275 could actually take us down to 23,900 and closer to the 24,000 psychological mark, the break of which could then likely drive the price down to 23,480. And that was a former constraining line from summer 2025. And if that fails as well, then maybe the 23,000 round level could come next into view. slightly lower. The 22,975 has been a key support back in August, so maybe that region over here could be the next target in case of sharp downside movements. And we can see the RSI, the stochastic oscillator, also reflecting the negative pressures in the market, but we are not close to oversold territory, so that kind of keeps the risk to the downside, unless of course we manage to rebound near 24,275, in which case we may see another test around this resistance trend line, probably somewhere between 25,000 and 25,200, where the 150-day moving averages are located. Now beyond that, such a move above this trend line would boost market sentiment and deliver a nice rally up to 25,830. So it's going to be a tough week for global markets as Middle East crisis and high energy prices continue. Let's see if it's going to be another breakthrough, but it seems that downside pressures could persist, particularly on Wall Street, while oil prices and the US dollar could remain supported. So that's all from me, guys. Thank you for watching. If you like my video, please subscribe to this channel. More videos will follow up later this week. So I wish you have a great trading session, and I will be back with more updates. Bye bye for now.